Hello students, hope you all are well. Let us start our next video on the basis of elements of accounts part 2 standard 12. Students, the last video I completed the second chapter according to your textbook. The second chapter was accounting for debenture. And today I am going to start the fifth chapter which is called accounting ratio and analysis. After completing the fifth chapter, once again I will come back the third chapter which is called the company's final account, the fourth chapter analysis of financial statement, and the sixth chapter which is called cash flow statement. After that we will do the divisions. So let us keep the focus on the fifth chapter which is called accounting ratio and analysis. According to that board paper style, you will get total 8 marks of this from this chapter. Out of this 8 mark, the 2 questions you will get the MCQ of 2 marks. 2 questions you will get the section B, that is 1 or 2 lines questions answer, and 1 questions practical that you will get from section D. You know that one, section D means 4 mark. So 4 mark 1 questions plus 2 MCQ plus 2 section B, that means 2 plus 2 plus 4 is equal to total 8 marks. But keep in mind that section D 4 marks you will get the 2 practical sums. Options are there, for that I wrote it here or 2 practical sums you will get, but out of that 1 you have to attempt. So 1 is equal to 4 marks, 2 plus 2 is equal to 4 marks, is equal to total 8 marks. So let us see what is chapter 5 or what is the accounting ratio and analysis, which is given the page number 210. Actually ratio how to calculate, that every one of you know, because whenever I have taught you the first chapter, that time ratio and proportions share, that time I already told several times to you also. But from this chapter, this ratio will help you. Which way this ratio will help you? Before explaining the definitions of this ratio analysis, from my viewpoint, I want to tell you that the businessmen, they are running the business, but whether they are running the business in correct way or not, sometimes they have to check. By physically seeing the business, it is not possible to understand. You have to compare the sum of the data with the others data, and the result whatever you are going to get, that result according to optimum, according to reach the optimum positions, whether it is correct or not, that you have to check through the ratio analysis. As for example, I want to tell you, suppose your gross profit you are getting 25%, the others businessman is gross profit is getting 30%, or maybe your net profit and others net profit are not same according to your percentage or the proportions or the anything else. So there you have to compare where we are going to get, where we are lacking, why you are not getting, where is your mistakes, to identify or to know the not to reach to optimum level. That ratio analysis is explained. According to the definitions you are giving in your book, definitions and explanations, it is given in your book that I had written it here from your textbook only. I want to explain it, the meaning of the ratio analysis. I.M. Pandey says that the relationship between the two accounting figure, the relationship between the, whenever you are going to compare, at least you have to get the two figure, then only you can, you will be able to compare the two accounting figure. The relationship between the two accounting figure that expressed mathematically is known as financial ratio. Expressed mathematically if it is expressed, then it is known as the financial ratio. Ratios help to summarize the large quantity of the financial data and to make the qualitative judgment about the firm's financial performance. What I said, ratio help to summarize the large quantity of financial data and to make the qualitative judgment about the firm's financial performance. In short, it is said the firm can understand through ratio analysis that in which place the firm has to improve or change anything to overcome the correct positions. This analysis will say you where you are going correct or wrong to reach the optimum positions. Matlab you have to compare the last year profit, this year profit, or last year expense or this year expense, or one expense with the other's expense, how much it should be and how much at present you are. That is called ratio analysis. Now, I told you the 2 MCQ from this chapter as well as the 2 section B also from this chapter. So 4 questions you can say it comes from the theoretical. So theoretical also you have to pay attention. Whatever it is given in your textbook of page number 210, the definitions and the explanations it is given, that you will go through from your textbook, and the theoretical part what you have to know, that also I have written, that also you have to go through. Next point is, this is first point is I told you the meaning of the ratio analysis. The second point is called the presentations of the ratio, how it can be presented. Whenever you are going to compare one data with the other's data, it can be compared in the different way. So how many ways are there to compare? That MCQ it may come. The following 5 ways are there. That there are the total 5 ways are there that ratio can be presented. So you can present the ratio in 5 different way. Which ratio you are going to compare, that depends on out of these 5 which one will be the suitable. So that is the number of questions, that the following 5 ways the ratio can be expressed. The number 1, in terms of proportions. You can compare the ratio in terms of proportions. Proportion symbol every one of you know, this is called the proportion symbol. In terms of proportions, suppose as for example I want to tell you ratio, I did not explain now I want to tell you, as for example current ratio it will come afterwards, but one current ratio, that formula it is current assets by current liability. This is the formula is the most important. I will go through all this formula. I will say that where it will be applicable, the formula it may come in the MCQ, the applicable it may come in the MCQ or section B. So you have to go through this all formula, you have to learn all formula, how many formulas are there, that I will tell you. So let me explain the first. In terms of proportions, as for example suppose current ratio is one ratio. So current ratio formula is, that will come afterwards. Current ratio is equal to current assets by current liability. Current asset by current liability, suppose as for example if I say you are having current assets 3 lakh and you are having current liability 2 lakh, that means your position is something better because liability is lesser than the assets, or assets are more than the liability, and it can be expressed the 1.5:1. What is called 1.5:1? That means if liability is 1 rupee, then current asset will be 1.5 rupees, मतलब 1 रुपया 50 पैसा. If liability is 2 rupees, then it will be 3. Do you understand? If it is 3, then it will be 4.5. If it is 4, then it will be 6. So that is the thing. If it is a 2, it will be 3. So if it is a 2 lakh, it will be 3 lakh. I want to tell you, it can be expressed. This is the one way to express the ratio. What is the name of this way? In terms of proportion. So in terms of proportions also ratio can be expressed. Next is coming in terms of percentage. All of you know the percentage symbol. This is called percentage symbol. So it can be expressed in terms of percentage also. Just say I can say that for example net profit ratio, it will come afterwards. That is 1:1 ratio example I have taken, one formula I have taken to make you understand the 5 ways ratio can be expressed. That is, second is called the net profit ratio. Net profit ratio is equal to net profit by sales into 100. That is the formula. Net profit by sales into 100. That will come after us in details. Suppose net profit is equal to 60,000 and sales is equal to 3 lakh, and your net profit by sales into 100, it comes 20%. So 20% is your net profit. That can be expressed through percentage. 20% of what? 20% means how much it will be sale. 20% is your NP. This is the meaning of that. This is the meaning of the 20% is your net profit, means how much is your sales. The 20% will be the, so your sales is 3 lakh. 3 lakh or 20% is equal to 60,000. Clear? Third one, in terms of time, it can be expressed in terms of time also. How? 3 times, 4 times, 6, 1 times, 2 times. Multiply. Times means multiply. As for example, stock turnover ratio. Stock turnover ratio is equal to cost of goods sold by average stock. One formula is there that I told you. One ratio formula I have taken to make you understand. Stock turnover is equal to cost of goods sold by average stock. I mean, suppose cost of goods sold is 3 lakh and average stock is 1 lakh. That means it can be expressed not 3:1, but it is 3 times. This is called 3 times. 3 times means is average. If average stock is 1, then cost of goods sold will be 3. If average stock is 2, then cost of goods sold will be 6. So this is called that 3 lakh divided by 1 lakh is equal to 3 times. So whenever you are comparing, or whenever you are going to find out the stock turnover ratio, that stock turnover ratio you cannot express through percentage or proportion. That is the things what I want to tell you. You cannot express through percentage or through proportion. It can be expressed only through times, only through percentage. This is only through proportions. This is. So this is the things which you have to understand. Next, number 4, in terms of fraction. Ratio can be expressed in terms of fractions also. How it will be? Suppose, as per example, share capital is 5 lakh and non-current assets is 2/5 of share capital. 2/5 of share capital means if share capital is 5, then non-current asset will be 2. If share capital is 10, then non-current asset will be 4. This is called fraction. 2/5, what I wrote it here, this is called fraction. So it can be expressed through fractions also. So NC, matlab non-current asset, is equal to 5 lakh multiplied by 2/5, which is coming 2 lakh. So this is also one way to express the ratio. And the last one, in terms of days, week or month also. This days, week, months, collection period, it will be required. One example I have taken, collection period of the debtors. All of you know, to increase the profit, you have to increase the sale. To increase the sales, you have to sell the goods through credit. And whenever you are going to sell the goods on credit, that time you have to spend some time to collect the money from the debtors. Collection period of the debtors is equal to debtors plus bills receivable by credit sales into 365. This is one formula that will come afterwards. Collection period of the debtors, the formula is debtors plus bills receivable by credit sales into 365 days. So as per example, suppose your debtors is 50,000, bills receivable is 23,000, sales is 7,30,000, and collection period will be the debtors plus bills receivable. 50,000 is the debtors, bills receivable is equal to 23,000, and credit sale is equal to 7,30,000 into 365 days, which you are getting 73,000 by 7,30,000 multiplied by 365 is equal to 36.5. That means 30 days and 5.5 days. 30 days and half. So it could be considered as a 37, round figure, 37 days. This is days. So you have seen that one. That first ratio, it was expressed through proportions. Second was percentage. third was times, fourth was fraction, and the last one is 37 days. Matlab time. It is called number of days in terms of days, week or month. When we multiply by 365, that means answer will come days. When we will multiply by 52, then answer will come week. Understand? And when we will multiply by 12, the answer will come month, because month means 12, week means 52, and days means 365 days. This is the overall idea about the ratio. Theoretical part slowly we are going to cover, and slowly also we are going to enter to the practical sides also. Now what you have to learn the practical sides from this chapter, that is called the classifications of the ratio. Classifications of ratio are the two ways. It can be classified into two ways. All this ratio, whatever it is given in this chapter, that can be classified into two ways. One, A, that is called the traditional classification. Another, B, is called the functional classifications. So this also, the section B, 2 marks questions may come. It can be how many ways to classify the ratios. There the two ways are there. One is called the traditional classification, another is the fractional classifications. Traditional classifications, again it is classified into three ratios. One, the ratio of trading account and profit and loss account. Two, the ratio of balance sheet. And the three, the compositive ratio are covered. So actually the traditional ratio practical sums, it is not given in your book, it is not also included in your course. That things which you have to learn, that is practical question is coming from the fractional classifications once again. But for the theoretical part you have to know that classifications of ratio are two are there. One is the traditional classification and the fractional classification, and also you have to know these three names: ratio of trading account and profit and loss account, ratio of balance sheet, and that is called comparative ratio are also covered. Now it is coming, which is main thing from this chapter, which we are going to learn the practical matter, where you will get the 4-mark practical question, that is called the functional classifications. Functional classifications, how many are there? Total you are going to get 1, 2, 3, 4. Total 4 functional classifications you are going to learn from this chapter. And these 4 you have to know the name. One is called the profitability ratio. Second one is called the liquidity ratio. Third one is called the solvency ratio. And last one is called the efficiency ratio. So once again I am telling you, this is most important practical sums. From these 4 ratio you have to understand. And this 4 ratio, once again it is classified, because profitability ratio, few ratios are called the profitability ratio. Similarly, some of the ratios which is coming under the liquidity ratio, similarly solvency ratio, and similarly the efficiency ratio. Here the profitability ratio, liquidity ratio, solvency ratio, and efficiency ratio, these 4 are very important for in this chapter. So keep it in mind. Once again I want to tell you, the profitability ratio, liquidity ratio, solvency ratio, and efficiency ratio. Again we will classify the above 4 ratio in details in the next page. So let me start the next page. This is the next page, profitability ratio. How many ratio I told? 4. One is called the profitability ratio, second is called the liquidity ratio, third is called the solvency ratio, and fourth is called the efficiency ratio. Here you see the total how many ratio formula you have to learn or you have to know. Here 4 ratio, again it will be under the profitability ratio 4 ratio will come, under the liquidity ratio 2 ratio will come, under the solvency ratio 4 will come, again under the efficiency ratio 4 will come. That means total you are going to learn the 12 formula or the 12 formula ratio from this chapter. 4, 2, 4, 4. Here I am coming. The next is coming profitability ratio. Let me explain all 4. So From this chapter, fractional ratio total 14 are coming. Profitability ratio, under that 4 ratios are there. Liquid ratio, 2 ratio are there. These 2 are called liquid ratio. These 4 are called profitability ratio. These 4 are called solvency ratio, and these 4 are called the efficiency ratio. Why it is called the profitability ratio? These all 4 ratios, it is expressed through profit, gross profit ratio, operating profit ratio, operating ratio, operating profit ratio, net profit ratio. For that it is called profitability ratio. Similarly, the liquidity ratio is called current assets and current liability related the ratio which is coming, that is called liquidity ratio. Solvency ratio, generally the debt, equity shares, total assets, total liability, total interest related the things which is coming, that is coming for solvency ratio. And the fourth one, efficiency or activity ratio. Under this efficiency and activity ratio, again 4 ratio is coming: stock turnover ratio, working capital turnover ratio, debtors turnover ratio, creditors turnover ratio. These all are related with the, it is expressed the activity or the efficiency. For that it is called the efficiency ratio. So keep it in mind what I want to tell you. The third page, this is page number 3. All these 14 ratio I have written it here: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. These all 14 are coming under the heading profitability ratio, liquidity ratio, solvency ratio, and efficiency ratio or activity ratio. Students, you have to learn the formula of all these 14 ratio, because whenever you will going to do the practical questions, first step is there, you have to write the formula. Without writing the formula, if you are solving this one, the marks will be deducted 1 mark, because you are having the 4 marks for the practicals. Out of this 4 mark, 1 mark is the compulsory for writing the formula. So don't forget to write the formula whatever the questions is coming. Now here one thing you have to keep in mind, that formula is compulsory I wrote, and trend. Whenever you will go through from your textbook, I will show it. The trend is there. Trend is there means where it will be applicable. That trend also you have to learn. So 2 things you have to learn: where it will be applicable and the formula, and then practical questions which you have to do it. Now let us start one by one this all 14, from 1 by 1 practical sums, this all 14 ratio, and after that we will go through the questions from the exercise. First let me solve few questions from the illustrations where you will get the solutions. First is coming profitability ratio. Under the profitability ratio, profitability ratio, under the profitability ratio you are getting first gross profit ratio. Very easy. Gross profit ratio formula is gross profit by sales into 100. That I want to show you, where the trend is there in your book. Yes. This is called the formula. Yes, I got it. The page number 216. Page number 216, here it is given. You see that formula. This is called formula. Formula is the gross profit ratio is equal to gross profit by total net sales into 100. This is called formula. And objective, gross profitability of this business can be measured through gross profit ratio. Trend, this is called trend. So each formula, these 3 things you have to learn. One is formula, second is objective, third is trend. Trend rate is written, it is the income based ratio, thus it's increasing. The trend indicates the enhancement of the profitability. So this everywhere, whether if I forget to say, keep in mind, every formula in your textbook under that objective and trend is there. This objective and trend also you have to learn. One more I want to show you so that you can understand. See this page number 219. This is formula. This is objective. This is trend. The formula, objective and trend, everywhere you will learn it. Correct? Now, where this I was telling, profitability ratio is equal to gross profit ratio. Gross profit ratio formula is gross profit by net sale. Keep in mind, gross profit by net sale. Net sales का मीनिंग होता है sales minus sales return is equal to net sale. Gross profit by net sales into 100, and net sales is equal to sales minus sales return, but it may be the cash sale and credit sales both. For a practical sum, see the illustration 1, 2, 3 and 4 of page number 216 from 12th accounts part 2. So I want to take now your textbook, the illustration 1, 2, 3 and 4. First illustration of page number 216 of illustration number 1. Calculate the gross profit ratio from the given information of Z Company Limited. I want to explain few questions from your illustration. After that we will go exercise. It is given Z Company Limited 2 years is given, 2016 and 2017. 2016 sales is 480 and 2017 sales is 6 lakh. Gross profit is 1,20,000 and gross profit is 1,80,000. You have to compare the gross profit amount which you got 1,80,000 against the sale of 6 lakh in the 2017 and the gross profit of 1,20,000 against that sale of 4,80,000, whether it is a optimum level or not, whether it is a correct or not, that is called the ratio. And how you will do? Now you know that one question can also be asked on the basis of the information of 1 year. 2 years is given, so we will find out the answer of 2 years separately. Gross profit ratio is equal to gross profit by sales into net sales into 100. That I already told several times. Gross profit by net sales into 100. So now it is coming, gross profit is 1,20,000, it is given. The sale is equal to 4,80,000 is equal to 100, multiply by 100, it is come 25%. Here it is coming 30%. So first year is 25% and second year is 30%. Interpretation it is given as compared to the previous year, gross profit is increased from 25% to 30%. It indicates growth in gross profitability. It is increasing, and gross profit is equal to that is sales minus cost of goods sold. That also you keep in mind. This formula will help you. The gross profit is equal to sales minus cost of goods sold, CGS. Cost of goods sold short form is called CGS. 2016 gross profit it is 25%, then sales obviously it is 100%. The cost of goods will be, because if it is a 25% and sale is 100%, so CGS is 75%. Similarly, so 25% is equal to 100% minus 75%, or 100% minus 75% is equal to 25%. Similarly for 2017 also. So that is given that CGS, you see the first year CGS is 75%, second year CGS is 70. CGS is increasing means the gross profit is not decreasing. CGS is decreasing means gross profit is increasing. So 75 से 70 आएगा तो 25 से 30 आएगा. यहाँ डिक्रीज हो रहा है तो यहाँ इंक्रीज हो रहा है. Second illustration. From the given informations of the Q O Limited, O business enterprise, calculate the gross profit ratio. Sell 8 lakh, 12 lakh. Cost of goods sold, CGS. CGS का दूसरा एक फॉर्मूला है, that you keep in mind, that will come you afterwards. Opening stock plus purchase minus purchase return plus purchase expense minus closing stock. That one formula will come. I will show it. So here it is given, here it was given sales and gross profit. Here it is given sales and gross profit. Here it is given sales and cost of goods sold. But already I told you the gross profit is equal to sales minus cost of goods sold. So this formula if we apply, so we will get the gross profit, because I want gross profit ratio, I want gross profit, I want net sale. So wherever we are not getting direct gross profit, then you have to find out the gross profit. Gross profit is not provided, thus gross profit is required to be calculated. Gross profit is equal to sales minus cost of goods sold, it is given formula. So 2016 the sales is 2 lakh, sorry, gross profit is 2 lakh, sales is 8 lakh, and cost of goods sold is 6 lakh. These two is given, 8 lakh and 6 lakh is given. So this we are going to find out. 2 lakh is the 2016 ka gross profit. Similarly, this is 12 and this is 10, so this is also 2 lakh. But question is that both the year gross profit are same, but percentage of GP will not come same because it depends on sale. See here, 8 लाख बेच के 2 लाख प्रॉफिट हुआ, 12 लाख बेच के 2 लाख प्रॉफिट हुआ. ऑब्वियसली यू अंडरस्टैंड दैट फर्स्ट 2016 का पोजीशन बहुत अच्छा था. देखो यहीं से पता चल देता है. ये 25% जी ग्रॉस प्रॉफिट है, यहाँ 16 ऑफ 2/3 मतलब 16.66%. क्यों ना, यहीं से पता चलता है. हियर यू अंडरस्टैंड, अगेंस्ट द 8 lakh the profit is 2 lakh, against the 12 lakh profit is 2 lakh. Now formula, gross profit is equal to gross profit by net sales into 100, which is coming 2 lakh by 8 lakh multiplied by 100 is equal to 25% in the 2016, and in 2017 2 lakh by 12 lakh multiplied by 100, which is coming 16.66 or 16.2/3%. Next is coming illustration 3. All this question will not be same like the previous questions, keep it in mind. So sometime you have to find out that the another type of questions, sometimes gross profit you have to calculate where it is not given in the questions, like that. Third questions, the informations of the 2 years of Q company is as follows. Calculate the gross profit ratio. These are the information it is given 2016 as well as 2017. 2016 is given sales return, opening stock, purchase expense, closing stock. We all of you know how we are going to find out the gross profit by using the trading account. So by using the trading account also we can we will be able to find out the gross profit ratio, because which comes trading account debit side, which comes trading account credit side, every one of you know. Sales trading account credit side, sales return, it will be deducted from the sales, opening stock trading debit, purchase trading debit, purchase expense trading debit, closing stock, it will come in the trading credit. Similarly, this is the amount is given. That another format there, they have find out the gross profit. Same thing. What they have done? First they have taken the sale of 2016, it is 10 lakh 20 less sales return. So this is your net sales. So sales से कौन सा expense deduct करो, जो sales it comes trading account credit sides and which comes trading account debit side, these are the expense we will deduct. So this is called sale. And now what we will deduct? We will deduct opening stock, that is cost of goods sold, it is called. These all things are called cost of goods sold. I told you opening stock plus purchase expense minus closing stock is called cost of goods sold. So opening stock plus purchase expense minus closing stock is called cost of goods sold. Cost of goods sold, तो sales minus cost of goods sold is equal to profit. Just now we said sales minus cost of goods sold is equal to profit. So this is sales and this is cost of goods sold. This is cost of goods sold. How it's coming? Opening stock plus purchase expense. If purchase return is given, then purchase minus purchase return, the final amount will come. Then purchase expense added less closing stock. This 6 lakh 10 is equal to cost of goods sold. So sales minus cost of goods sold is equal to gross profit. So 390 is the gross profit. If 390, if you are getting gross profit, then 390 divided by 10, because gross profit by sales into 100. So which is coming in the next page. See the gross profit by net sales. Gross profit by net sales into 100. 3 lakh 90 divided by 10 lakh multiplied by 100, which is coming 39%. I think you understood. And 1 year I told 2016. Similarly, you will be able to understand the 2017 also. Same thing, only the figures are written. That is sales minus sales return is equal to net sales. Net cost of goods sold, opening stock plus purchase expense minus closing stock is equal to cost of goods sold. Sales minus cost of goods sold is equal to gross profit. Now gross profit by sales into 100 is equal to gross profit ratio. Now the fourth illustration. The fourth illustration, it is given in the page number 218. The 2 years information of F company is given below. Calculate the gross profit ratio. What is given? 2016 and 2017 sales return, purchase expense, and change in stock. This is the new thing you are getting, change in stock. Here it is given that see the just previous one, sales is equal to 10 lakh 20. Sales return is equal to how much? Sales return is equal to, this is 20,000. So net sale you are getting 10. Now cost of goods sold or cost of goods consumed meaning are same. The purchase, this is purchase expense, purchase plus purchase expense, or change in stock within bracket it is given 20,000. 20,000 means minus change in stock, means that is called the change in stock, and minus it is given 20,000. So what you will do? You will do that 6 plus 30, 6 lakh 30 minus 20 is equal to 6 lakh 10. So you are getting it here, that is called 3 lakh 90. Here opening stock how much it was given? 1 lakh 40 and 1 lakh 60. Now once again I want to explain it here. The previous illustration and this illustration, if you go through, you will be able to understand. This is changing stock minus 20,000 which is given. See, the previous illustration opening stock was 140 and closing stock was 160. Opening stock was 140, closing stock was 160. The difference is giving, that is 20,000 minus. So 140 minus 160, opening minus closing, is called changing stock. 140 minus 160 is equal to minus 20. Similarly, here it is given opening stock 160 and closing stock 150. So here plus 10. So do you understand? Opening minus closing is called changing stock. So here it is given opening minus closing, because closing is more than the opening, for that minus 20. 390. 390 means 39%. And here also same thing, that sales return, purchase expense and change in stock 10. Why it is 10? Because opening was how much? 160 and closing is 150. Do you understand? So opening minus closing, that is 160 minus 150, which is plus 10. This is 10,000. Now this you are getting 8 lakh 50,000. Here you see, here you got the 8 lakh 50,000, because 8 lakh 40 plus 10, this is plus 10, this is minus 20. Understand? चेंजिंग स्टॉक होगा तो ओपनिंग और क्लोजिंग मिल के दिया, इसलिए आपको माइनस होगा तो माइनस करना है, प्लस होगा तो प्लस करना है, ये ध्यान रखना है. That will keep it mind. But previous formula I told that less closing stock, because opening we added, closing we deducted. Here opening we added, closing we deducted. Where opening stock and closing stock both are given, but where change in stock will be given, that time minus figure within bracket mean minus figure will be deducted, and if it is not given minus figure, then it will be added if change in stock is given. So one you are getting 39%, another you are getting 43.33%. Students, hope you are understanding. This is 39% and 43.33%. Hope you are understanding. Even though at any place, if you have doubt anywhere, then you can tell me at any time, and next video we will explain the next ratio. Okay, bye.